The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Uh, 9350. Oh, is that a double top? Let me just get that right so I can give you a very detailed analysis. Yeah, it's 50. I thought it was double top. Very good. Okay, so here we go. Hi, everyone. Basil Chapman, Tiger Technicians Hour. So, what is today? Tuesday the 7th. And we're looking at the Dow down 45 points, 47 points now at 23,500. S&P is down 4.5 at 2586. Comp index is down almost 30 at 6757. The VIX index suddenly climbed. Funny, it's really. I've been talking about this for a few days, and I said to subscribers to my opening call. This was on my bullet points out of 15. This was number 13. I said, watch under 50, watch the TVIX under 8, waiting very close to nibble. Missed it because it went just under 8, and now it's higher. It's at about 8.40. The VIX itself is, let's have a look at that, VIX. Didn't take the move, was there. We're at 10.07, having gone to a low this morning of 9.29. Wait. Oh, that's the VIX, of course. That's the VIX instrument. The TVIX, which is what we were looking at as a trade, which is an instrument that trades with the VIX itself, is at 836, and this morning's low was 807. So it didn't go under 8. No, it did. Yeah, 7.95. All right, so we've got that. So let's just make it real simple right now. It's saying to me there's enough evidence to suggest the upside is becoming extremely difficult to break out and hold in the 23,600s. Doesn't mean to say we have to collapse, but it does mean to say resistance is getting stronger and stronger and stronger, and that the support is going to be tested with slightly lower lows and slightly now it should be slightly lower highs as well. All right, let's get to the numbers. INDU. Dow right now, down 48 at 23,500. Hit a high today of 23,000. Let me make this a little bit wider so that we can see it. 23,602, and this is G/C in the Chapman wave notation. Yes, we could still get that D, but look at the MACD. Moving average convergence, divergence, very negative. Stochastics at 93%, less than it was when it was in the 97, 98% area just a week and a half ago at the lower highs. So it's making higher highs with a lack of follow through in the technicals. So now we need to watch this closely because the 9-period exponential moving average of 20,448 is highly likely to be hit this week. Let's go to the S&P, SPX.X. The S&P is trading at 2586, down 5. Also G/C, but as if you're looking at the chart, both the Dow and the S&P have just walked the 9-period exponential moving average, barely closing below maybe once in the last month, and hitting it a few times and mostly closing above. My suggestion to you is to watch out because at 2581, 4 points lower, the S&P will be testing the 9-period moving average, and that in fact starts to set up lower highs and lower lows as formulation. Qs, 153.46. Power shares QQQ Trust Series, the Index 100 trading vehicle, trading down 32 cents. F/B, MACD is still very strong. Stochastic still very strong at 94%. So it's going to take a break over the next 5 to 7 sessions below 151.98, the 9-period moving average, to really shake up the Qs and start to say, hey, now that 9-period moving average in the daily is going to be very like a magnet, but we haven't got there yet, and the weekly chart is still very strong in all the indices that we've looked at so far. Let's go to the IWM. The IWM is still one of the weaker ones. It's taken out the previous lows. It's trading at 148.69, down 2.09, and this is telling me, together with the NYA, that there's a good chance that it's just going to get harder and harder to break to the upside in this particular phase, besides which there's now there's a lot of news that can turn out to put a cap, a dark cloud over the market, because that's what it needs to be able to get that VIX index to push into the 13s and hold there, and for the market to have double digit in the Dow, triple digit in the Dow, double digit in the S&P, moves to the downside. But the NYA has made a peak F at 12,443, and there's a Roman candle, and I'll just say it again, anytime the New York Stock Exchange starts to trade at 12,310 and hold there for two 120-minute bars, so that's like 240 minutes, right? There's a good chance you're going to test the low of 12,280 at some point fairly soon. Let's go to the gold. So gold, what I'd say to subscribers is that my thinking was that within this week, there's a chance that gold will try to find some support as the dollar, if it does, get to a leg D in the daily. That's going to set off some wave shocks that say maybe now the dollar has a little bit of a rest after the September 8th low and a month of rallying. We'll see. But in the meantime, gold is down 5 at 12.76, not doing very much right now other than going sideways. But if it cracks 1260 support, that's really negative. If it goes above 1287 in the next day or two, that's going to be good action. So let me show you silver, because it's the same thing. Silver, in fact, has a little bit higher, a little bit better chart pattern, but it's doing the same thing, limited upside. And we'll see at 16.97, we'll see whether or not the 12, why do I keep saying 12? Why this, if the 16.50s, no, the 16.80s is going to hold as key support in the next 2 days, and you see a rally to the upside. Now we'll go to the dollar, and this is really interesting. To the penny in the dollar index, trading at 95.05, up 30 cents. It went to 95.15, which is the exact peak C high. So there's a peak C1, peak C2 at this particular point. I think it's still going to go above 95.15 for a leg D. And the weekly chart will then go to squeak to a leg C, and then you can start having a bit of a sideways consolidation. This is very interesting because the UUP, which is what we are long, 24.75 was the high that we were looking to see break. That was peak C, and today's high is 24.74. Also hasn't done it. I think it will do it, but meantime, it's got double top tendencies right now. If you're looking at the EUR USD, it's not yet finding support, but it's trying to. It broke to a lower low at 1.15. That kind of was my target, the 115s, and we're there. It'll become a positive chart formation if it can hit 1.17 in the next 2 days. And the USD JPY, as we go out, is in fact running a little bit, and it has gone to a GC up.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, we're back. Let me just finish the notation on this particular chart. It's the XLK. XLK is the S&P 73. The S&P tech sector. And what's really important about this is that I'm putting it together here. Just want to do the notation DE, FG. Is that an FG? Oh boy, maybe it is. There are. Okay, that's an A, a B, and a C. And that's all. E, F, G, A. Whoa, that's the way it is. C. All right, that's what I wanted to do. So this is what I'm looking at here. So I'll come back to these in a moment. I just want to finish the notation. I had a question in the den, so I wanted to get to it. So the USD JPY, which is the dollar-yen currency pair, let's call it the yen, has gone to a high, G/C. There's just enough room to say, yep, you can make one little pop to the upside, but the technicals are starting to deteriorate, and the weekly chart is starting to slow its upside momentum, but the technicals are still good. So all we have to do is at 113.84, look at the high of, let's just say that a push into the 114.80s would be very positive, and a slide below 113 short term, 113.30 would say, uh-oh, start being careful here. This is what I really want you to do. Look at high-grade copper. High-grade copper has just been holding steady, with a chance of making an H pattern. Well, it looks like the H pattern is unfolding, and you'll know if a high-grade copper starts to take out the low of the, that was October 27th, at 3.07. Takes that out, and it goes to a leg C in the daily, starts to interfere with the weekly charts, a very good pattern, because now it'll start to become negative, and that will make for a peak D in the daily, peak E in the weekly, and a leg D in the monthly. And I'm going to make a big deal about this D all the way through November to see if it gives us a peak D and where it lands up. But it looks to me like high-grade copper is done for now. Let's look at the TLT. TLT was running earlier this morning. Whoa, now it's in the 126.74 area. My contention has been that if the TLT breaks into the high 126s, 126.70s, which is just touched, into the 127.30s, and this is still a single leg A. I wish it was a B, but anyway, it's an A with very good technicals. My contention has been that when the yields start to come back down again, and the bonds, like the Lehman 20-year Treasury bond ETF, TLT, trading at 126.73, up 62, up almost 0.50%, 0.5%. My contention has been that money will flow from the insecurity of stocks into the so-called safety of bonds, at least in the shorter term. And I think that's going to happen. And that's why it's so important whether the dollar continues higher or it takes us as a 2-3 day break and then breaks higher, or it just actually starts to turn down from here. That's why the action of gold is going to be very, very important. Now, I want to look at crude oil because crude oil is in fact pulling back just a tad this morning. It's down 23 at 57.12. It is in a leg E, a really strong move to the upside, both technically and physically. The price and the technicals have been in unison. The stochastics at 91%. The weekly chart, stochastic, is at 92%, and the MACD is good, and the monthly is starting to improve. Why do I make a big deal about this? Because we have an ETF, which I think, my thinking was we're close to starting to have to take profits in it. We've had it for a while, since August in the high 14s, and it's trading at 16.42 right now. Yesterday it hit, whoa, is that correct? Yesterday it hit 16.55. That was a very big move for this particular commodity tracking fund. And leg E, very strong weekly, and a leg C in the monthly chart. And that's saying to me that commodities are in play. That's really why I wanted to do this. One of the reasons why we wanted to hold the commodity index, and at the time I said it's a little bit risky for the next 2-3 days, but I think this one is weighted more towards the crude oil. We're going to take it because I think crude oil might not go up very much, but I think it's got a lot of support. In fact, it went up quite a lot. So this DBC is a very nice tracking fund for us. The other thing I want to look at is within the context of the markets, I wanted to answer some questions. IBB, I'd say there's a chance, and we don't know yet, and I don't want to even play it, that the IBB might become attractive again if the market pulls back and IBB, which is the iShares NASDAQ Biotech ETF, can find some support. It's finding no support. It's down to today, 313. The next thing we were looking at, and I wanted to go through this again because I had a subscriber comment yesterday, and I did it in my, let me if I can find it. I did this in my newsletter this morning. I showed the chart of the SMHs, and I've been making a bit of a deal out of it because I think it's really important that we keep an eye on the SMHs. The SMHs, the QQQs, and the XLK. That's how I got to that XLK. You see, that 9-period moving average, that black moving average right there in the daily, way lower in the weekly, and way, way lower in the monthly, is telling me that there's an extension that's gone on that is beyond what should be normally expected, the number of days on the upside, beyond what one would normally expect. And whenever an index does that, yes, you could get a sudden smack to the downside where it takes out 6 or 7 or even 12 sessions to the left because it pulls back sharply. And this would do that. It's at 103.49 SMH, down 79 cents, having made a new high yesterday. This is a clue for me that there's a little bit of action going on. So yesterday's high was 104.27, and today's high is 104.35. And it did that, and here's a little bit of a clue. This is part of the Chapman wave methodology, the things that I look for. I look for round numbers. I look for all sorts of things, as my subscribers know, very detailed report every single day. But most importantly, today it opened at round number 104, moved up slightly, and now it's at 103.51. And the 120-minute chart you can see here, I showed this 4 time frame this morning, I showed it, has gone to a leg D and now a peak D. And let's just say, and one of the comments I made is that I believe that the semiconductors will be trading in the 98s we'll get there over the next few weeks. And I think that the 106s is going to be sort of the maximum to the upside just in this very move right now. All of that means absolutely nothing if a stock like NVIDIA which is really a big part of this. NVIDIA, Core, graphic processing for workstation, games, mobile devices is big on chips. F/B in the daily, D in the weekly, F in the monthly, and a D is being formed in the 120-minute chart. And on Thursday, and I'm pretty sure it's after the bell, I'm not sure if it's before or after the bell, earnings come out. So if the earnings outlook, there's no room for error. Earnings outlook has to be spectacular. If it is spectacular, and as I say, I don't think there's all that much room for error at this particular point. And if it is spectacular, a gap from the 211.09 level we're at right now into the 215s, 217s that holds for 2 days into Monday would be spectacular action. Anything that disappoints and you suddenly see it trading under 205, and it doesn't bounce back in 2 days.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. So what we're looking at here is, the SMH. Most importantly, until the SMHs, that's the semiconductor index, starts to trade under 100.85, that's moving average of importance. Let's just not make a mess around. Under 108. That's 7 points down from here. This could be a chop to the upside as it unwinds. But the question I gave myself yesterday was, is there any chance that over the next few weeks, if one was perhaps holding short and that there was still some chop, slightly higher highs to come, Is it worth it holding a short position? And my answer was yes, you should still have a buy stop or a stop, depending on whether you short a particular instrument or short the actual route, in this case the SMHs. For instance, at 107, I'd have to put a stop in at 107 if it got to the 106s, but that's not the issue. The issue is that from the chart formation that I'm looking at, both on the daily and the weekly, not yet the monthly, and the 120-minute chart, it seems to me that even if there isn't an extraordinary announcement made by NVIDIA, that it could be an isolated thing, but some of the other stocks, like, look here, the Applied Material, AMAT, Applied Material, chopping around, so it looks like it's flattening out here, not breaking down, but the MACD is breaking down, but the price is still holding on at 56.69. If you look at LRCX, that's Lam Research, another one of the top. Still, these two are kind of in the rectangle formation, maybe an oval formation, limited upside, I think, at this particular point. It doesn't mean to say they have to crash to the downside, but I'll just make it real clear. LRCX trading at 208. At any time in November, if it starts to close under 200, it's a real problem. Applied Materials, if it starts at 56.70 right now, if it closes under 54 at any point in the next 2 weeks, not good at all. That's where it starts to take on deeper downside connotations. FCG, a little quick detour here. FCG, natural gas, what's the question? Check out, sorry to barrage you. Yeah, this is an ABC. It made a D top in the daily and pulls back sharply, announcing a leg. I'm going to call this a leg. See, I see too many charts like this, and the way they broke out, it doesn't tell me that they're going to have a one-to-one to the upside from here, but it does say they should make higher highs and higher lows at this particular point, and it's trading at 22.62, whatever it is. First Trust National something, National. Good. All right, well, whatever, gas. Okay, natural gas. First Trust natural gas, and trading at 22.62, down 22 cents. Looks very good here, 21.90s to 21.70s. Good support, and then it should try for the 23s. And then it might struggle. It might struggle in the mid-23s. Hey, that's a nice bounce, but it might struggle in the 23s. Next question I had is, here we go. Oh, Intel, I didn't do. I wanted to do the, so Intel trading at a peak D, sort of struggling here, but still right at recovery highs. It's actually only a B in the weekly chart, and it's an E in the monthly at 46.50. I suspect in the next 2 weeks it will fill the gap in the 42s, but there's a chance it could try for the 48s. But in the meantime, I think upside is somewhat limited here. I need sideways to down consolidation. Next thing I said I'd do is look at the XLK, and the XLK has been also spectacular to the upside in a G/C. MACD is good, stochastics at 94%. Weekly chart, powerful move to this. I'm calling it leg F with very good technicals. I'm calling this a C in the weekly, in the 120-minute chart. I didn't know how to count. There's no other way to count it. So I'm not sure if it will make a new high, but it's getting kind of toppy short term. That's all I'm thinking. LYG, I think I did this yesterday. This was for Sandy. LYG is Lloyd's Banking Group, or maybe it came in I'm not sure. But what I said is let's wait because it made a peak F in the daily. A lot of resistance in the Chapman wave inside track repellent zone. Let's see how it handles at 3.59. I need another few days. I suspect that in the 352 to 349 area, 349 is the 200 period moving average. That's where we might see another burst of energy. But I have to tell you right now, because of the percentages involved, for instance, down only 4 cents, but that's $1.10. 1.10%. So let's just leave this for now. But this is the phase that I do believe that I'm starting to look at way more information that's saying the upside overall in the indices, the key indices, should start to become somewhat limited. I'm not yet looking at a downside crash, but I am looking at a consolidation with slightly lower lows, and we'll see what happens. We have Tom from Franklin, North Carolina. Tom, how are you?
Hey, Basil, how you been?
Yes, very well, thank you.
Got a question on theory. And if we could look at, I'm sorry to pull it up again, but the SMH 120-minute chart.
Yes.
Okay, if you go back to 1010, the date.
Let me do
So
that.
you and
Give
I
me
are
a
looking
sec. Hold
basically
on
at
one second. Just whoop. Here we go. I'm going back to 10. Got it.
Okay. I've noticed, I don't know if you've noticed this or not, but I'm talking about when you recycle the count.
Correct. Yep.
I've noticed that, like, we had a pullback on October 19th when it went from a C, and then it didn't pull back a whole lot and went to D. And yet when we went, I have an F, and we had a really big pullback, and then I recounted that would have been on the low on the 25th. And I started my count again over, which brings me up to a wave G right now.
Tom, let me just do this. I did this a little quickly earlier this morning, and I was sure. I thought I might have missed. Yes, I did. So I missed the first A on the 11th, 1:30 on the 19th. I called it an A, but in fact it wasn't an A. One of my trend lines was covering it, and I did this a little bit quickly this morning, going back. So I think you get a C, and then the C pulls back very sharply. Doesn't take out the original low of 96.41 on the 19th at 11:30 in the morning. It goes down to 97.19, and then it has a little mini ABC, and then the C from the old C it's like a Chapman wave overlapping wave. We get a D, an E on the 31st of October at 11:30, and then we get an F on the 1st of November at 102.44. Now we've started again, and we've gone A, B, C, and this is a D. That's the way I've got it.
Okay. Well, what I've put up, where you started your A again.
Yep.
Okay. I made it a D, E, and then I went to an F, where you have your C on 1024. And the thing that I've noticed is that when you have a pullback, okay, where your C is on your chart right now, where you have the green arrow.
Yes.
Okay. That low took out the low of 3 different letters, D, E, and F on my chart. And I noticed that, and then if you have where your last green arrow is, that pullback only took out 1 letter.
Correct.
And I've noticed that if it only takes out 1 or 2 letters, lows,
that's very bullish.
It's not a restart.
Right.
But if it takes out 3, it's definitely a restart.
Oh, very interesting. Hey, a refinement in the Chapman wave. Hey, Tom, hold on if you don't mind. We'll get back to this in a minute. Folks, the Dow's down 36, S&P's down 3.13.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So we're back. So a couple of things I want you to say. So, Tom, what I want you to do is look at the MACD pattern and the stochastic pattern, and you will see that when we started that rally that began at 11:30 on the 19th, you might have a slightly different starting point depending on where your 120-minute chart starts. But at that particular point, that was a low at 96.41, and then when peak A, B, C. If you look at the MACD and the stochastic, everything about them said that C has the look of a D, and I tend to keep that in mind if the price pullback takes out the previous starting point. And in this particular instance, it didn't take out the 96.41. It went to 97.13. Or is that 19? Yes, 97.19. And that says that even though I've got an up arrow, it really could have been a plus sign, and then you get your inside P, gray A, gray B, gray C, and then what happens is you get an overlapping D to the upside, which coincides beautifully with the way the MACD ran up and the stochastic ran up, and then failed at the peak F to have a higher in the stochastic than it was on the left side, and then it pulled back quite sharply, and it gave you another turn down. In this case, the MACD and stochastic were severely lower, but the price held beautifully. So when I'm looking at this, everything, and the reason why this morning I liked what I saw in terms of the notation and felt very satisfied, is it corresponded very nicely to the way the MACD, stochastic were working, and I was getting a D, and it was saying this is exactly the moment where the SMHs, the semiconductor index, should start to have at least some signs to test how any pullback will unfold. And at this point, it's minus 0.57. It's only at 103.69 days young, but it made a new high, and it's still only pulling back a little bit. So that's saying to me that the larger context of the MACD in the daily and the larger context of the stochastic at 94% is the start, the way it's turning down, and the RSI, relative strength, plus the on-balance volume. It's just the start of something that says, watch out, because the 101.94 9-period moving average, that probably is going to start having much greater importance. That's the way I like to look at it, but it's also the way I have to start using the shorter term if there's any chance of it reversing, if there was any chance of wanting to go short, anything like that. That's kind of what I want to look at. So I thank you for bringing up that other one. Yes, that was a C. It did pull back, and then it gave an overlapping, the way I've counted it, to the upside. Is that kind of what you're seeing on my chart?
No, I agree with the notation on your chart. What I was getting at is that when you get a pullback, if the pullback takes out, in other words, let's say it goes to a D and then it pulls back.
Yes.
Okay, if the pullback takes out the low of the wave that went to D and the low that went to wave C,
right?
it almost automatically says you have to do a recount. You have to do a restart right then. So in other words, instead of calling it an F and maybe going to a G, then that has to be, I've noticed that you can start the count again at an A.
And you can start a blue count.
In other words, it worked out perfect, and it seems to work out quite a bit.
Good. And the other thing to keep in mind is if the market of anything you're watching only pulls back sharply in one leg down, goes to a trough A, and then has a really nice V-shaped recovery of about 1/3, you can consider that there's a chance that the bull phase is still intact.
Right.
So I hope that helps. Thank you for calling and pointing it out.
Okay. Thank you, Basil. Have a good day.
Tom. You too. So a couple of things. I had a couple of questions about, so what's happening about positions that we have? Yeah, we're still long Bank of America. We're still long, although it's already made a BAC, let me see, has already made a peak E, and I think this is the pullback we've kind of been anticipating. We have long positions. We did have an IPO, which is always tough to get. We had a position in it. Did very nicely in the pullback, and then yesterday I had a deeper pullback than I was anticipating, so we got stopped out this morning. It didn't fulfill the requirement of the D, and that's, you know, it happens. That's the way it works. But we also got a new stock today at $6.10. It went slightly lower, and then it bumped up to 622, I think it was, 625. And now it's trading at 617. So, you know, we'll have to see how these things work out. But this is where I'm looking, this is the phase where I intend to add more to the short side. And although the long side is open, the long side has to be in areas that are acting very well right now. That's the way it has to be. So, okay, next question I had was SPY. Put SPY on the 19th of January, 2018. Oh, wait, I put at 250 and write it, put SPY on the 19th, for the 19th of 240. Oh, this is a buying situation, options. Now, let me just do this for a second here. It's an important point right now. Why? Because the SPY has gone to a potential leg F to the upside. And if it's at an F to the upside, I have to say, wait a minute, it's at an F, but one of the MACD is deflecting lower. It hasn't crossed positive. It looked like it could, but it hasn't. Stochastic is lower than it was in even the peak C and D back in the 257s, and now it's at 258.42. Had a high today of 259.35. The stochastic is good at 90%, turning down. On balance volume is getting, this is the overbought area, starting to dip a little bit. So this is saying to me that at 257.60, the 9-period exponential moving average on the daily chart is going to become more and more important. Let's just look at the SPX, because I'd like to do it with the cash index. Yeah, G/C. MACD is deflecting lower. Stochastic is at 89%, very good, but lower than it was before. Chance there's a doji candle this week on Friday, or you start to pull back. I think that the upside is getting really limited. There are chart formations. If I look at the weekly chart of the S&P, yes, it's extended. If I go to a chart, I had a whole bunch. Did I write them down? I wrote them down. Where's the book? Oh, I hope I can find them. I just went through so many charts, and I looked at them and I said, whoa, wait a minute. Let me see if I can find it. PayPal, PYPL. Ooh, I meant to write down specific. Yes, there it is. So look at PayPal. Look at the monthly chart. Look at that. Not a green candle since February of this year. Yep, February at 39 and it's trading double at 74. That is a parabolic move. It's not the kind of parabolic move we saw back in 1999, 2000 with some of the charts in the monthlies. But boy, this is a parabolic move. And the price, if the price had tripled and it was parabolic, I'd say, oh my God. But as it's standing right now, PayPal trading down 39. Actually, I'll take a moment to talk about it because it fits into this exact question about the put, the SPY, having a spread or whatever you want to have on the SPY going out in January. I'll talk about it based on PayPal.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So I did not know. I told him that NVIDIA is reporting today. Whoa! I wish I knew that. All right. Well, that's going to be very important because 4 points up or 4 points down on NVIDIA is going to make a huge difference this time tomorrow, if that's the case. So let me just do this. PayPal. Look, leg D in the monthly chart, still very, very strong. That gives it tremendous support in the 72 to 68 area. The 69 level is the 9-period moving average support in the weekly chart, leg F. It could be an instant restart. At this point, I'm satisfied just to call it a leg F, and a leg F in the daily. And these charts are all saying, you know what? Fabulous moves. Time for a sideways consolidation at minimum. So now let me go through a whole bunch of the questions here. So a question is on Bank of America. I think I just did that. Bank of America pulling back after peak E. I think it will fill the gap in the high 26s, and then we're going to see why, because of the TLT. If the TLT continues higher, which I think it's going to, then the yields are going to pull back, and those financials are going to start to slip again. That's my thinking. XOP, I don't remember who asked that question. I think it was Julie. Julie, XOP is acting very well. I'm calling this a leg B. It's the same pattern as a number of stocks in this category. Leg B daily, leg B weekly, monthly is not very good at all. So this is the S&P. Oh, it's the S&P Spider Oil and Gas Exploration. So it looks like it has more to go on the upside. Tremendous support at 36.60. Tremendous support at 35.15. That's that. Yes. Coincidentally, I just went through CARB. That's our IPO that we got. Not CARB. It's CARG. CARG pulling back. It's down 79 cents. We bought it at 31.50. We're out at 30. $1.50. Usually I don't take as big a risk, but anyway, we did small position, took a risk, and we're out. And one of the reasons is because of the peak D that we got in the 120-minute chart. There it is, peak D at 33.23. Now it's about to test 29.20s, the 200-period exponential moving average support. Not for everybody. It's an IPO, special situation. And the chart that we bought this morning is up 8 cents from where we bought it at $6.10. Hey, that's what we got.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.